today in this episode, we're going to be learning more about fixed rate lending with Term Finance. Today, I'm with Matthew from Term Finance. So we're going to go over a lot of topics from what is fixed rate lending, how does it work, and their launch on Avalanche, besides building on Ethereum earlier, and also their recent partnerships and their values and benefits for the users, and also Matthew will be sharing some exclusive alpha leaks towards the end as well, so make sure to stick around, guys. All right, shifting to you, Matthew. Can you introduce yourself and share a little bit more about Term Finance as well, please?
Sure. My name is Matthew. I'm glad to be on the call. Thank you. So I'm an engineer at Term Finance, also, I guess, part-time BD. Previously, I was based in San Francisco, but I relocated to Asia about 4 years ago now. Term Finance, I guess our mission is to bring stability and predictability to DeFi lending. And we do that through creating transparent and secure fixed rate markets. So yeah, in TradFi, fixed income is the largest financial market in the world. And in DeFi, prior to Term, this market was virtually non-existent.
So if many of you are like DeFi enthusiasts or have played around with DeFi, you often know that the yields fluctuates a lot. It's quite volatile. So this is something that it's quite innovative in DeFi. So let's get to know more about that. First of all, can you share a bit more about what's your inspiration or motivation behind like building on Avalanche, since you were also based on Ethereum, right?
Yeah, well, I mean, one thing is with Ethereum, a lot of liquidity there, but the transaction fees are quite high. So being on mainnet is very expensive for users. Avalanche offering lower transaction costs makes it much more affordable. It's one reason. The ecosystem as well, there's a lot of unique use cases with Avalanche. Like, for example, SAVAX is a good collateral for us. It's yield generating and it's not available on Ethereum.
I see it.
Yeah, like we have some solid collaboration opportunities there. So we launched already with Benki, and we're to work with other protocols like GoGoPool and with Securitize.
Are there other chains that you're planning to scale to besides like Ethereum and Avalanche?
Any other EVM chain, particularly like L2s that have active DeFi users, will be our target.
Got it. Right. So let's dive more into like the fixed rate lending mechanism. So can you share and walk through how does the fixed rate lending mechanism work, and what's the difference between the traditional like DeFi lending protocol and Term Finance?
Sure. I guess our major difference is we're using an auction mechanism. If you look at earlier attempts that rely on, say, an AMM style model, like a DEX pool where LPs are required to deposit idle capital that sits in the pool, then waiting for transactions to show up, that generates no income in between transactions. So the average return to LPs is quite low. Then from the borrower's perspective, the borrower deposits collateral into the smart contract. Then rather than getting loan proceeds from that transaction, all they're getting is an ERC20 token. Yeah. And they take an additional step in selling that token into the DEX in order to realize any stablecoin proceeds. So it's a two-step process. And the second step, because it is a DEX, you have the issue of contending with slippage. So in practice, if you try to borrow more than 200 to 300K at a time from these existing fixed rate protocols, then the interest rate quickly jumps from, let's say 5% up to 6, 7 plus, and that's not really scalable from an institutional perspective. So with Term, we're using a auction-based mechanism, and this is nothing new. It's how the US government has been selling treasuries for nearly 100 years. They run 6 bond auctions every month, selling at a time up to 50 to 60 billion of treasury notes in a single go. And today, every G7 state issues government bonds in the first instance through an auction process. And the auction process is a coordinating mechanism that batches liquidity, and it's tried and tested way to create scalable loans with no spread, no slippage, and low fees. So, our idea was to take that model and bring it on chain, which is what we've created. It's an on-chain auction protocol where at regular frequencies, for example, weekly, borrowers and lenders come together. They submit levels where they're looking to borrow or lend at, And at a single point in time, we close all bidding, and the smart contract determines the single market clearing rate.
I see. So, can you share to the audience on how the interest rate are determined and what kind of terms users can choose with term finance?
Sure. So when we deploy an auction, we deploy it with a currency pairing. So the supply token, the collateral token, and that will also have a term period on it. So that term period could be 4 weeks, 6 weeks, 12 weeks going out to a year, maybe even longer. A year in DeFi is like 30 years in the real world. Not much demand for that yet. So the lender places an offer. They want to lend a certain amount of money, and they will set the minimum interest rate that they're willing to accept for their loan. On the flip side, then the borrower places the bids to borrow borrow a certain amount of money, and they state the maximum interest rate that they would pay for the loan. When the auction closes and we go through the closing process, the interest rate is calculated in the smart contract itself. So it finds a single market clearing rate that maximizes the total amount matched in the auction, and everyone gets done at the same rate. There's no opportunity for like spread there, since we're a single price mechanism. There's no rate for borrowers and a different rate for lenders. So there's no penalty for overbidding. You're willing to pay 10%, for example, but the market comes back with 4%, then you only have to pay 4%, so you get a better deal. Similarly, you can invert that on the lending side. If you're willing to lend at 4% and it comes back at 10%, you're going to get filled at 10%. Yeah, everyone gets filled at the same rate. And as I mentioned, these are all sealed bid auctions. So nobody sees the rate that you're willing to pay until after the auction closes. So people are incentivized to bid their true valuation. And, the long run vision here is that at steady state, there's a token maturing every week going out to 1 year. And the idea is that this would serve as a benchmark DeFi interest rate where do loans in DeFi trade at every point in time going out to 1 year.
I see. Were there like any situations like that you can match like the borrowers and lenders? Like any of that situation occurred before?
Yeah, I know we've left money on the table. You can see that if you look at our Twitter, we have a term_finance Twitter, which posts our auction results, and you'll see how much was supplied and how much was cleared. So anyone that wasn't cleared, money gets automatically returned to the borrowers and lenders. So the capital is only locked for a very short period of time. But yeah, if you're putting in, you're only willing to lend USDC at 15%, you're probably not going to get filled. Or if you want to borrow at 0.1%, you're probably not going to get filled. So our auctions usually clear it somewhere in the middle on the borrow lend side for Aave and Compound.
I see. So like if people like lend straight away, are there like lead time that they have to wait before like they get matched with a borrower, or is it like instantly?
It's when the auction closes, so it's at a single point in time. So for example, if our auction closes Thursday at noon, then you can put up a lend offer, a supply offer at 11:55, and there is a short clearing process after the auction closes where we do the matching and run our complete auction process. That's usually 10 minutes, give or take, depending on gas and congestion. Once that's done, then you get issued the loan, or you get your money back instantly. So it's possible if we open an auction for a week and a lender puts in an offer 6 days before the auction closes, then yeah, that money is going to be locked for 6 days. But they could also do it 10 minutes beforehand.
Got it. All right. Can you share a bit more on like what are some of the assets that user can provide for borrowing and lending, and what are the yields that they can expect?
Well, assets, it's any ERC20 token with oracles and meaningful on-chain liquidity can be supported by Term. One distinction with us is like all of our loans are isolated pools. So it means, we can onboard new collateral types quite quickly with no contagion risk to the protocol. In terms of yield, for markets that are available on Aave and Compound, users can expect rates that are more competitive for both borrow and lend. This is possible because, term, we utilize a single price mechanism. So we don't have these 2 to 3% wide spreads that you'd see on, say, Aave, for example, when utilization is low. We're actually able to allow the borrower to pay less and the lender to earn more at the same time, as usually they meet in the middle. But, as with all over collateralized loans, the interest rate is usually quite low, which is great for the borrower. But as a lender, it's really targeted towards people who are more concerned with capital preservation. Like fixed rate lending is not a meme coin. So, if you're looking for degen yields, it's probably not where you go.
Can you share to the audience on like what's the typical range of degen yields and the yield that they can expect with like fixed rate lending?
Honestly, we're right up there with Aave and Compound. So, if you look at the 30-day average, we do work out as a better value. The lenders can get a better rate, the borrowers can get a cheaper rate on borrowing. But for degen yields, you're not going to 10x your portfolio lending on term. But if you're worried about preserving capital, then we want to be a name there along with Compound and Aave as the safe place to put your money.
Got it. So what are there like any other protocols that does like similar like auction model to you guys? Like how do you differentiate from competitors in the landscape?
No one does the auction model. There are some AMM competitors, which I already discussed. They have scalable issues, and then I guess order books is another option as well. But order books are asynchronous. You might have someone placing an order noon New York time, and they have to wait until noon Bangkok time, 12 hours later, to get the order matched. Our auction mechanism is like it's a coordinating function inside it, because the auction closes at a single point in time. So we batch liquidity, and that process allows us to get the best rate for all of our users.
Got it. So can you share a bit more earlier on like how do you collaborate with other protocols or partnerships, for example, like Benki that you mentioned earlier?
Well, with Benki, we onboarded SAVAX as collateral for our first auctions on Avalanche. And that was an easy choice because, SAVAX is very liquid, and there are a number of users requesting to onboard these assets. So Benki team was very supportive with the co-marketing around the launch, and it was quite successful.
I see. So are there any other exciting upcoming partnerships that you can help share?
On the AVAX side, we are talking with and looking to work with GoGoPool and with other providers in the space. We're looking to expand more in the RWA space and Avalanche in particular.
I see. What about on Ethereum?
On Ethereum, yeah, we've just launched recently. We held our first auctions with Kelp and with Renzo. We piloted an auction with a permissioned RWA, which was Matrix Ports STBT token.
You assess new collaterals to your protocol. Like how do you assess the type of collaterals or assets that would pass your criteria?
They need to have meaningful like liquidity on chain. They need to have a reliable oracle. And obviously then it has to be an ERC20. But yeah, as I said, all the loans are isolated pools. So someone who's putting up wrapped EtherFi's token as collateral, they're not going to have any exposure to someone who's put up, I don't know, savings DAI as collateral, for example. Separate lending pools.
Got it. Can you share a bit more on the revenue model? Like how is the protocol making money and what fees do you charge users?
It was pretty simple. We just charge a protocol fee of 50 bips. The borrower pays that. And then there are liquidation penalties as well, but the liquidation is a public function, perform liquidations in the same way as Aave. But the key difference being borrowers can only get liquidated to a level that will bring the loan healthy again. So it's more like a narrowly tailored liquidation. It's not a full liquidation.
I see. Let's say if some users are like new to term finance, can you share like what are some of like the most popular assets that users are deploying on your protocol right now, like which chain, which asset, and like the terms that they can expect?
I mean, you can look at we post the results weekly, so you can see the volumes there. But historically, the most popular one has been an auction pairing that takes, say, wrap stake ETH, for example, as collateral, since it is yield bearing and people can, leverage that for yield farming and hedge their exposure there.
Like target users, like who are majority of your users and clients that are using the protocol? Is it more on the institutional side or on like the retail side?
Yeah, we are primarily an institutional or a whale product. We are looking to unlock some more passive features with vaults. We haven't finalized any plans around that yet, but yeah, it's not, I said, it's not a degen. You're not going to 10x using term.
When you say like whale institution, what do you classify as like whale institution? Like minimum position size or like the net worth that you're targeting?
Yeah, minimum positions, both, I guess. I mean, if people have a high net worth, they're probably more likely to have higher positions. But if you look at, any protocol needs these kind of users to grow. If you look at, Aave, for example, I believe the top 1% of users on Aave account for something like 50% of their TVL.
I see. So it's like in a like millions dollars of range of TVL that you would expect.
Yeah, I mean, yeah, basically.
Can you share a bit more on like your like go-to-market strategy? Like how do you onboard new users? Do you usually like as like a BD, right? And an engineer as well, like do you pitch to users more or like where do you find your users? Or do most users like come to your protocol?
We've had a bit of both. We have had users show up that have been repeat users that are very loyal customers since day one. Some we've met at events, at Token 2049, actually Thailand Blockchain Week in November last year. We have a few users from there. And some of it's through just general networking. Some people have found us on Twitter, on Telegram, Discord chats.
So it's both like inbound and outbound, right?
Yeah, definitely. I'd say there's probably more outbound, but we have had both success both ways.
Are there like particular regions that you guys are operating in or like targeting?
Well, not the US, I guess.
I see. Like what makes like other regions more attractive than the US?
Just regulatory approval. Countries like Singapore, for example, are very crypto friendly.
Since you mentioned a bit on the real world asset side, can you share a bit more on like how term finance unlock the liquidity and composability of like collateral for on-chain real world assets?
Yeah, so like if borrowers that can post RWAs as collateral, they can then use that to borrow an asset, for example, like USDC, and then they unlock the benefits of collateral mobility that the tokenization of RWAs promises. And as I said, we've piloted an auction backed by Matrix Ports SGBT, which is a positioned RWA.
I see. Are there like other examples of future real world assets that you're planning to bring on chain?
We'd love to. I'm not sure if I can say any particular names right now, but it is something we are actively exploring.
Okay, on the security and trust side, I mean, security is quite important. It's very important for DeFi. How do you guys like ensure security and mitigate risk of its lending protocol, for example, like particular for institutional users?
Yeah. So, well, the contract code is public and open source on GitHub, so anyone can view it there. I guess they're all verified on block explorers too. We've undergone regular audits with companies like Sigma Prime, runtime verification. And we went through the DeFi safety process with a 93% score. We've done formal verification with Certora, and we've implemented some fallback oracles for redundancy. Our primary ones being Chainlink oracles wherever they're available. And then again, which I mentioned previously, but unlike variable rate protocols where all collateral is held in like one large kind of single commingled pool, collateral in our term contracts are segregated by maturity. So there's more diversification of risk on the lending side.
Mhm.
You know, our eggs are not in one basket, so to speak.
Got it. So on the market outlook, now looking into the future, what kind of market trends or shifts do you anticipate that will have an impact on the DeFi space?
For certain, you know, the entrance of institutional players and RWAs, which bring increased stability to help mainstream adoption. You know, we see BlackRock partnering with Securitize on their Biddle product and similar.
Do you think that like the approval of ETF would play a big part into like your protocol?
I hope so. It means our gas fees on mainnet will get more expensive though.
Well, since you're operating on ETH, but also like the EVM kind of ecosystem, so I think that that could be like one of the macro factor that kind of drives usage like on-chain Ethereum products. So what impact do you anticipate with term finance launch on Avalanche and also like the DeFi ecosystem on Avalanche as well?
Yeah, well, our sort of ethos is, you know, bringing fixed rate lending, which is, you know, the largest financial market in the world, has been around for a long time. Bringing fixed rate lending to the Avalanche ecosystem is something that's needed to create a mature financial system anywhere, and it can help bolster RWA adoption on AVAX in particular.
Got it. All right, coming to the final part or closing part, can you share a bit more on like alpha leaks that you can share to the audience to keep an eye out for with term finance, upcoming plans and upcoming features, future initiatives that users can look forward to?
Sure. Well, I can't say too much, but you know, everybody's going crazy about points. So yeah, watch this space.
Okay, so everyone's doing like the point system. To be honest, I think it's a good sustainable way that DeFi is moving towards, right? Compared to like the previous cycles where like majority of the yield injection are through like tokens, played like artificial yields. And then once yield drops, then people go to other places with higher yields. And that also like kind of like reduce your token supply as well, right?
Yeah.
So what do you think of like point system in terms of like compared to the traditional like token injection to inflate artificial yields?
We have, you know, I mean, one of the, without saying too much, you know, holding our tokens will incur points. So it's a way to, you know, try and retain users.
Mm,
There's a second product, I guess, we'll be launching related to points later, which I don't want to discuss at the moment. I don't think I'm allowed, but that will try and incentivize people to keep holding our points.
yeah, that works. Yeah, I totally agree. Actually, it's like I think that has always been like one of the key challenge in building DeFi protocols, right? And like how to retain users, how to make like users and TVL more sticky, especially where users have so many choices on where to go for yields and it's mercenary capital. Like user can just move anywhere, anytime, right?
Exactly.
Like, as a BD, like how do you maintain relationship with users and like improve retention of these users?
Honestly, being honest, you know, open, being personable, constant communication, and just keeping a good relationship goes a long way.
Right. All right. So I think that wraps up today's episode about term finance, fixed rate lending, and their updates on Avalanche as well, besides operating on Ethereum. So thank you so much, Matthew, for sharing your insights and alpha. Yeah, and guys, stay tuned with their updates of term finance and stay tuned and subscribe on the channel for more alpha leaks and insights. All right. Thank you, guys.
Thank you.